Hello traders, hello everyone, and welcome to our new webinar. I hope everything works fine. As you know, we skipped the webinar last Monday. I didn't feel well, but I'm fine today. So thanks everyone for joining. So as usually, I will walk you through a lot of important charts and updates here on the markets. But just let me wait a little bit longer here, maybe for more people to join. So today I'm working from home, so you have a good chance to hear my kids and wife. But I hope everything will work well, that there will be no lag. So just let me know, please, maybe in the chat boxes here on YouTube, or maybe here on TradingView. If you're watching this on TradingView, just make sure that everything is working good. So please let me know if sound is okay. Okay, so today I want to start with here with the US notes. As you know, markets have been relatively slow last week, especially in the second half because of the Thanksgiving holidays, which somehow tried to cause some stabilization for the US dollar, which is normal during holidays when flows change. But for now, dollar on the longer looking to maybe predicting for a few weeks. Still, dollar is in a bearish trend, and we expect that this downtrend will resume after the current stabilization. So since the US CPI data came out lower in the US back 2 weeks back, since then we have dollar accelerating to the downside. Okay, so I think that this dollar downtrend will now stay intact, but keep in mind that we will now have a few inflation data from other regions, like I think that this week we have from Australia. So even now, if there will be lower inflation in other countries, similar like in the US, based on latest readings, then we can expect that those currencies will also see some kind of a pullback. So if you're looking for Aussie, maybe Aussie dollar longs, just keep in mind that there can be some setbacks if inflation there will also come to the downside and will maybe follow what is going on in the US. Okay, so this is something that we have to consider because normally the US is the leader and everything comes behind it with a delay. Okay, so this kind of delay could maybe provide us and give us some interesting opportunities if you are a longer term dollar bear. So I think that dollar will stay weak, but in the meantime, we could see some kind of a pullback still. Now, looking at US yield, here we have these 5 waves up. We have been talking about this a lot. We have some very nice, interesting reversal from the recent highs. I think that this could be a top in place, even if just temporary. I think that the lower side of this impulsive channel could be retested here, maybe around 4%. So there is room for more weakness. And why I think that there is room for more weakness? Well, because you have this 5-wave drop here on the 4-hour time frame. So this 5-wave drop suggests that weakness will resume after a 3-wave corrective rally. Okay, so now we are maybe already in a correction after this wedge has been broken recently. So this could allow maybe dollar to climb a little bit higher, but overall dollar is still weak. So even if we see some kind of a strong push to the upside in US yields, I don't believe that US dollar will see any significant recovery. I just think that there is ongoing a corrective rise. So now when we think that the US yields are coming to the downside, the important is to know that we are expecting here, we were looking for higher highs on the US yields, but now when we have fifth wave in place, there can be a lower high building out on dollar index, and at the same time, stocks maybe could stay in uptrend. Okay, so that's still very important, and I think that there can be interesting opportunities for dollar shorts. That's really going to be the case. Now we have also Kiwi raise decision this week as well. So I will also try to look at Kiwi a little bit later. They're expected to be on hold, so it will be interesting to see how the market will react. It's still somehow in New Zealand, inflation is still higher compared to Australia. Now, if we take a look also on maybe firstly on dollar index, since this is probably the most important chart to look for. So dollar index, in my opinion, is coming to the downside in this intraday bearish impulsive sequence. And what I like so far is that we are seeing some price stabilization here around 103 level. So technically this could be a temporary bounce for a wave 4, and I would be really love to look for potential dollar shorts this week, especially if we maybe try to go and retest this level from Wednesday when it was a day before Thanksgiving. Okay, so maybe this is some interesting potential resistance for this week. I think that wave 4 could easily retrace the 38.2%. So if these levels will be retested here around 103.30, I think there can be opportunities on the short side. So maybe you will not trade dollar index, but maybe you will try to pick or look for the week for a very strong currency like pound is doing very well, for example, and then obviously you may look to trade and be long the strongest currency versus the weakest if dollar index will really continue to the downside. Okay, so I am bearish on the dollar. I still don't know if this will be higher degree wave C later on, or maybe still an extended wave 3 of a new bearish impulse. I just want to look at the markets from a minimum objective and expectations. I don't want to predict too far into the future. Okay, so I want to look at the markets, what may happen, let's say, in the next week or two. Okay, so I think that there is opportunity on the short side. While the market is trading below this 105 level. If suddenly this level would be broken, let's say by the end of the week, we see dollar index trading this level at these levels, then I'm afraid that we will have to turn back to the bullish side. Okay. Now let's take a look also on the euro dollar. Someone asked if we can look at Bitcoin and Ethereum. I will look at the Bitcoin at the end. Okay. So euro dollar might have completed this very big flat correction. We've been tracking this for a while, and so far it was a very nice response to the upside. You can see here we have this simple basic chart where it represents this full cycle. You have these 5 waves up, okay, and then the counter trend movement in 3 waves. So we have these 5 waves up and then a counter trend movement in 3 waves, which is actually more like a sideways move because it's a flat, not a zigzag. But still, I think that we may not be maybe far away from the date when euro dollar will try to push prices above July 2023 highs. I just still think that this could be the case, especially if the US yields are really coming to the downside. Also, German yields obviously will come to the downside, but maybe they will fall slower compared to the US yields, and this could keep euro dollar in uptrend. Now, on on the 4-hour time frame, of course, similar idea like on dollar index. Obviously, you are seeing here wave 3 testing these resistance levels. We have rejected these levels because of the holidays in the US. So on a low thin liquidity, you may want to see this price stabilization. So I think that this could be a wave 4, and I'm looking for more upside here after this correction. Support is around 108.30 for this week. Okay, maybe there are already some traders who try to be long on euro on thin market conditions, because even if sometimes there are thin market conditions, volatility can be huge. And maybe there were some traders who wanted to be euro dollar long a little bit early. But if that would be the case, then I think that maybe some already pulled their stops higher. So I think that this is quite interesting level here around 108.50 for potential stop orders of those who are long on this intraday or on these intraday developments. So I think that if this level will be retested, some stops could be cleared out, and this could be a perfect example when the euro dollar could potentially actually resume higher. That's how it works, unfortunately. So invalidation level at 107.55. Okay, and maybe the most important thing of this whole chart is that this first leg here, okay, from the lows was a very small one. Okay, but then you have in the middle very strong move, and typically this occurs at the start of a higher degree impulsive sequence. So that's why I'm thinking that maybe euro dollar really completed and found the important low, and that we could see much more upside. We are also seeing DAX stocks in very strong recovery mode, which I think they will see imprint even higher prices after pullback. So this could keep dollar on dollar weak, while the other currencies could stay strong. Now, if we take a look also on cable, so pound is quite strong. Okay, it's been one of the strongest actually over the last few days. But again, these are not the normal flows because of the holidays last week. But still, looking at maybe firstly the daily chart here, I think that we could actually be seeing much higher prices going into the end of the year. But of course, there can be some setbacks. Unfortunately, even if I think that cable could be much higher by the end of the year, I just do not see any good price action at this stage for potential opportunity on the long side. Okay, I just think that maybe what could really confuse me, or what I don't really like at this stage, even if I am bullish on cable, is that we have some wedge patterns here going on. Okay, I'm not sure if maybe that's a leading diagonal of this subwave 1, could be an ending diagonal, but the important is that as long as we are here at this trendline resistance, it's very hard to say that we are breaking higher. So that's why I also prepared another wave count. I hope I have it here. Okay, which actually shows the idea that maybe we're in the middle of an extended wave 3. I really love this interpretation, but for this wave count to say that that's the case, I want to see this current lag to the upside to become a little bit more strong and extended, to make sure that we are in a wave 3. So normally in this situation, you want to see that wave 3 will be longer compared to the wave 1, right? So in such case, I want to see price, let's say, breaking above 1 to 690, 127 level to make sure that we are in a wave 3. In such case, I would be willing to look for potential longs on a fourth wave retracement. But for now, at this stage, at this level, it's a little bit too risky in my opinion. Okay, so I want to see either we go down from here and then you look for potential supports around 124, or you just wait for this price action to become even more extended, and then you buy dips after the small fourth wave retracements, right? So I want to see more price data for pound, but I just think that whole picture is really looking constructive here for the next few weeks. Now, let's take a look also on ASI. So ASI is coming nicely to the upside. It's been driving higher by Chinese yuan. As you know, Chinese yuan has been pretty strong last week. We will also take a look on that one. And what I like so far is that now ASI, as you know, metals are bullish, stocks are bullish. Okay, and now we finally have ASI also turning to the upside. ASI, historically speaking, has been very good performer in the risk-on environment. So if the risk-on is really bad, then keep an eye on those commodity currencies. They could really do well. But as I said, there are inflation reports which could potentially, if inflation will come to the downside, it means that central banks from those countries will be less hawkish, less aggressive, and this could cause some short-term setbacks on those commodity currencies versus the US dollar. But this could actually be just temporary reaction, and ideally will give us much better levels for potential longs versus US dollar if we really think that the US dollar has topped out. Okay, so what we are seeing here on the Aussie is some very nice 5 waves up here that unfolded from October of last year, and then a very deep pullback. I was quite concerned here what will happen down there, but we were at the 78.6%, and even if just temporary, I was expecting some kind of a relief rally on Aussie because, as you know, we've been talking about this wedge pattern here 2 months back or so, when we said that at least some kind of recovery should show up. And so far we have some interesting price action, but still we are not breaking out of this downward channel. Okay, this trend line resistance here around 66.40 is very important. Actually, we have 2 channels here. Okay, let me delete this. You have two trend lines, I should say. So firstly, you have this falling trend line, okay, and then you have this upward trend line. Let me make this maybe black, and maybe bold. Okay, so you have this upward trend line, and notice that whenever price can break the upward trend line in an uptrend, because after all, price is currently trading to the upside, right? So if the price can break this trend line, and it means that price is very, very strong if you see upper resistance line of a bullish channel broken. Okay, very simple concept. So in that kind of scenario, you would think that maybe that's an impulsive recovery, like a wave 3. So in such case, I would be looking this to be wave 1, wave 2, and we would have confirmation for a wave 3. So I would be looking for more upside than after pullbacks. And not only that trend line, as I said, at the same time, you could have a broken downward trend line as well of this corrective channel, which on the other hand also suggests that market has bottomed and that we are headed higher. So I really love how Aussie is so far unfolding, but we are still not seeing these breakouts here. But I think that maybe, who knows, this week we could have some very interesting confirmations that Aussie is headed much higher. And as I said, one very important market to track, whenever you're trading Aussie, you should look for Chinese yuan. Also should look maybe for Chinese stocks. So as looking at this chart, as you know, just to give you a quick review what I was expecting here months back, I was expecting that here dollar Chinese yuan will firstly take these highs out before finding a potential top. Well, we are seeing now a little bit strong move to the downside happening much earlier than I thought. But still, even if this high hasn't been out, I just think that there is room for plenty of more weakness here. Why? Because I assume that this could be the first leg of a higher degree free wave drop. So I'll be looking for more weakness. We are now at some first supports here, but as long as we are below 72.6 level, then I think that this weakness could resume lower into this wave A. Okay. If suddenly, let's say, Aussie will come back to the downside by the end of the week, and we are not seeing that breakout that I was just talking about, and that maybe we see dollar Chinese yuan recovering back above 726, then I think that the risk of is again here, and we will have to adjust our views. But as long we have this current characteristics and current price action still intact with this dollar weakness and US yield stop, I just think that this is probably the most appropriate scenario to look for. Okay. Also, if we take a look on maybe on Kiwi, since I said that should be could be a mover this week. So rates are expected to be on hold at 5.5%. Inflation is 5.6, down from 6% on reported last time. and it was also below expectations, and unemployment is ticking higher. So there's definitely expectations that they will be on hold, and if they will convince speculators that they're really on hold, then this means that Kiwi again could see some kind of a pullback. So if that would be the case, what I'm looking at here on the 4-hour time frame is still a bottom formation, but we have a potential leading diagonal. Maybe now some kind of a flat formation could unfold if we really come back to the downside. But I think that this is a very important support at 600 here, and then you have a little bit lower. You have 59.40 area, and you have these important pips as well. So we will see how the price action will unfold here. But overall, I just think that if we see a pullback, there can be a short-term pullback, and that we will see more upside later on, because I just think that we have some very clear price action here. When looking at the daily chart, that was a very strong impulse, and now you have a counter-trend movement. Okay, so I think that more gains is certainly here are expected, but I'm just not really sure if that will happen straight from here or after a pullback. Okay, I will just have to wait a little bit here, especially on Mondays and Tuesday when we have the start of the new trading week. That's definitely not worth to take an action. You just firstly, especially after Thanksgiving holidays, you just firstly want to wait on the US session to completely unfold to see where the flows are. Okay. Now let's take a look also on Pound Aussie. Now Pound Aussie is also I think quite interesting. Now all of those Euro Aussie, Pound Aussie, these cross pairs, okay, should move in favor of commodity currencies like Aussie and New Zealand dollar in risk-on environment. Okay, so I'm still wondering if maybe this break to the downside will show up now when we have these stocks recovering and US yields showing a potential top. So I think that we have potential head and shoulders top formation here, and we are now consolidating. I'm not really sure if this could be maybe some kind of a triangle here on the way down, or maybe wave 2 will be a little bit more complex, but resistance is certainly here at 194 to 195. Okay, so if Aussie would come to the downside, I still think that Pound Aussie will move into this potential resistance. So generally speaking, I think that Aussie could outperform Pound in the next few months. Okay. Now also we talked about dollar Mexican peso a lot. Someone asked if we can take a look on crude oil. Yes, we will take a look on crude oil later on. So dollar Mexican peso, as you know, we have been bearish in this one, and so far it's coming very nicely to the downside, and I still think that there is plenty of room for this weakness to resume towards 16 area. We're tracking the fifth wave. The market has not been able to break this trend line resistance here. Okay, so I think that was a wave 4, and now we have some lower lows, lower swing highs, which is nice indication of a downtrend here. Okay, so I think that more weakness here in the cards. Now, if we're looking to maybe play on the short side, maybe not bad idea to wait on some rally. Usually I will observe these horizontal potential supports for the current lag. So let's see if 17 could provide some interesting bounce here, maybe just short term, obviously, because I'm expecting wave 4. It's also a round figure, so this is somehow psychological level as well, which certainly could stabilize the market a little bit here. But what I would do if we really are going to see a bounce, I would compare maybe these previous consolidations, those rallies, okay? And because each market has its own personality, and sometimes those corrections can be very similar in length, okay? And if we see something like that, some kind of a pullbacks here, I just think that there can be opportunity on the short side, okay? So I would not be taking any kind of a trade here. I just think that if we see a bounce in three waves, there can be opportunity on the short side, okay? Also, Canadian dollar is also doing quite well, and Mexican peso is, but important for this week will be also to see what will be decision from OPEC. I think that they will announce the potential production cuts on Thursday. Okay, but if they will cut the production, then it means less oil means higher prices. Okay, so we will see how this will also this story will also unfold. But I'm just afraid that maybe crude oil could stick in this consolidation till we get this OPEC news out. Okay, so I'm actually observing two wave counts here, but the first and the primary is still potential completion of this ABC drop, and then you have this head and shoulder potential bottom formation. But what is important is that head and shoulder is not really head and shoulder pattern unless you see the broken neckline, right? So the neckline here is still far away, around 78.40. So if we can reach these levels, then I would be looking most likely towards 80, 81 dollars per barrel in the short term. But as long as we are here trapped in this range, and if this market will not find the buyers, let's say in the next 24 48 hours, then as I said, we will most likely have to wait till Thursday, till OPEC decision. And I'm afraid if that would be the case, then we should also keep an eye on this wave count, which shows potential triangle in wave 4. Okay, I'm long at the moment crude oil since last week, but I'm in with very small size. But if we all start breaking higher, let's say in the next 24 hours around 70, this level 77.40 or so, then I would be even looking for potential to add to the position. If we break lower, the 73.60 or so, then definitely it's good to be out. Okay, so that's for crude oil. Also, as I said already last time, important for crude oil is to link it with an inflation. If crude oil prices would suddenly be much higher, then this means that inflation will again tick to the upside, and dollar and crude oil could then have a positive correlation. Okay, so for dollar to continue to the downside, it's much better for crude either to stay sideways, to be to stabilize, or even to see more weakness. Okay, so we'll see how what will actually OPEC decide. Okay, uh, now let's take a look also on gold. So we have a pretty nice moves here on gold and silver over the last few days, if not weeks. Now, firstly, I want to look at gold. So gold is coming very nicely to the upside. You can see we are breaking this channel very aggressively. We are currently trying to break this 2000 magic level. I'm not really sure if this can happen on Monday. Okay, so I would not be willing to take any kind of a risk here. I know that there is on a longer scale, as you know, I'm definitely targeting new all-time highs, but I'm aware that there can be something more tricky and complex. Now, not everyone, but a lot of traders, investors are bullish metals, and whenever that's the case, market may not move straight to a new high in just one leg. There will be some different flows within this recovery to make an uptrend more tricky to predict. Okay, so if let's say in the next 48 hours we are not going to see any kind of aggressive buying here, for, let's say that we just stop at these current levels, then I'm afraid that something more complex here could unfold, even potential flat formation. Okay, something more complex like here for this wave B triangle. So I still think that if suddenly we drop 1930, 1900, that would be the key support. Okay, but of course, maybe wave 2 pullback is already finished and we are going to see straight move to new high exactly from here. But as I said, it's a little bit risky game plan to be long from current levels if you're not already long, obviously. Okay, so now when I said that maybe current resistance levels are very important, it's also important to observe the price levels on a smaller time frame. Okay, so if suddenly, let's say we stop here and we see prices coming back towards 2000 level, and then potentially we break even 1966, which is the support of potential subwave 2, then I'm afraid that wave 2 will be much more complex here. Okay, and you will see an ABC flat formation. So that's something that I'm considering, especially because I'm also looking at silver okay, at silver, which is moving into potential resistance as well. So looking at silver, here we have this weekly time frame. Notice that we have this trend line resistance here with wave D. So longer term, definitely I'm bullish silver. But when you have these prices approaching in this very tight range, still approaching the important trend line, well, then you just have to be aware that maybe there will not be just easy breakthrough. There can be some setback. So I'm just afraid that maybe we'll see some limited upside here for a wave D. So as you know, wave D is part of a triangle, and each subwave in a triangle, A, B, C, D, and E, have corrective subdivisions, meaning they are made by three waves. And if you look closely, we predicted actually this ABC move to the upside. And so far, this price is progressing very nicely. And I think that there is still room for $25, but eventually there will be a very strong resistance. That you have wave C that equals to wave A in that area. And then you also have this 2021 February and May 2023 trend line potential resistance. If we break this one, then head and shoulder target that we could watch for is around 2670. Okay, so we'll see what will happen up here. I think that we will have plenty of data to analyze by the end of the week. But if we really are going to see maybe move or to the downside, reversal lower than here for a higher degree wave E, then at the same time, as I said, gold could also even retrace towards 1930. Okay, so that's for gold and silver. Now let's take a look also on DAX. So just let me remind you guys, if you are here with us for the first time, please subscribe to our channel here on, if you're watching this in YouTube or in TradingView, or please just press a like button and make sure to support our work so that we will provide more of those webinars in the future. Okay, thank you very much. So DAX, well, German DAX, as you know, we've been talking about this very important support here around 14,700 here weeks back. Okay, it was very important support here in 2021, very strong resistance at the start of 2022. Then at the end of that year, actually at the start of this 2023, sorry, we have seen a very nice break to the upside, and now this year this support proved to be very important level twice. Okay, and what's most important is that we have a very strong reaction to the upside. You can clearly see a broken channel resistance. So I think that more gains here is definitely coming. But of course, whenever you have such a strong move and an extended lag like we have it now, I just think that you have to be aware of some pullbacks. There is horizontal resistance here, looking back at 16,000 here from September and August highs. So you are at this upper side of that summer range. So we'll see if this market could potentially see some kind of a pullback here. But if we see a pullback, that's going to be some very interesting opportunity on the long side. The supports would be around 15,500. Okay. So I'm definitely bullish on DAX. But if you're watching here, maybe smaller time frames and potential first support would be at 15,860. Okay, that's the first swing level for this potential wave 4. If we consider this could be an extended wave 3, but even if we see new high here after that current drop, I think that resistance could be very strong, not far away here. Okay, but overall, I'm bearish. I'm bullish DAX and also bullish S&P 500 as well. I will show you these two counts that I'm tracking on the S&P 500 longer term. So I think that here we have this ABCDE potential triangle, which certainly can be the case if this trend line will hold as a resistance now. Okay, we will see what happens this week around 4,600. If we'll try to see some slowdown, keep in mind that, as I said, we had a pretty aggressive move to the upside, and I'm quite convinced that if we go, whenever we go into the end, into the final month of the year, that there will be some profit taking, because after all, it was not a shiny year for this market. We had some very interesting and big swings on the in both sides. So definitely, those who were long in the last few weeks could potentially look to finish the week early, and this could provide some kind of a pullbacks here. So we'll see if wave E could unfold. Also, keep an eye where the WIX is trading, known as fear index. So as you know, if there is no fear based on this index, then it means that crowd is confident, speculators are confident that market will continue to the upside, and that's exactly when we should be aware of the opposite, and that's what the Elliott waves theory it's all about. Okay, it describes the crowd psychology. Okay, how the market moves from pessimism to optimism and vice versa. So if we're now seeing some optimism here, then we just have to be aware that there can be some different reaction than majority expects. Okay, and if we see maybe weeks that will stabilize here at these levels, this could be perfectly matching with our wave E pullback here. Okay, but I also have another wave count. Of course, I want to be prepared rather than confused later if I'm wrong. So if suddenly, let's say that market crosses this 4,640 level, then I think that another interpretation that maybe we could look for is this one. Okay? It's potential ongoing wave B rally that can move to new all-time highs. So if that's going to be the case, then you know that again, everyone will become very bullish here on stocks if we really start breaking higher. But I just think that that will be the time when we'll have to be aware of potential opposite reaction, because after all, if we break this 4640 as I said, then this is not a triangle, but the recovery will most likely have a corrective loop because of the overlaps. Okay, but what's good thing is that at least for the next few weeks, both wave counts can be pointing higher. Okay, so we either will continue to the upside after wave E pullback or after wave B pullback. So whenever we see pullback, I think that there will be opportunity, at least temporary, to be long stocks, while at the same time US dollar could see even lower prices. Dollar index could potentially move even towards 100. Okay, but then we will see what will happen maybe in the mid of 2024. Maybe there are some speculations that there will be a recession with a delay, because keep in mind that Fed was very fast hiking rates. So of course there is more time needed for this to be visible, the real response to be visible in the economy. So we'll see if maybe in 2024 there can be some recessions, and certainly, who knows, maybe this wave C could provide this to happen. Okay, now let's take a look also. Hello, Tom, how are you? Now let's take a look finally on Bitcoin. Okay, so Bitcoin, we've been talking about these new highs here at ahead of holidays. I said that probably we are going to see new highs on around Thanksgiving. We have seen here new highs, but I said that on this around holidays, it's very hard to trust these breakouts. So I'm just afraid that maybe this Bitcoin is approaching some resistance. I have two interpretations here, which could certainly suggest that this can be the case. First is that maybe wave 5 here came out from a triangle, and you are now going to see end of this cycle, and you will see a new free wave pullback. So the higher degree pullback could take us even back towards this 35,000. Okay, and the next interpretation is that this could be even some kind of a wedge pattern here in this ongoing wave 5. Okay, and you will see a new high and then push or reversal back to the downside. So I'm looking at two different interpretations, and both somehow suggest that bulls can be losing strength here. I'm bullish on cryptocurrencies. I will be expecting more upside, but I'm just afraid that there maybe could be some consolidation knocking on the door, especially if we break this 36,000, then I think that this could be the case. Okay, then watch out for 33, 34 to be the important support. So we somehow, I see prices, cryptocurrencies now in somehow neutral zone, let's say for the next 2 weeks or so. Resistance would be around 40,000, the upside projection for a wave 5. Okay, that would be probably the maximum level. The downside levels, the support would be around 33 to 34,000. Okay, so that's for Bitcoin. Okay, traders. I hope that you enjoyed this presentation. So once again, if you enjoyed the video, please press a like, leave us a commentary, share this video, subscribe to our channel, and I will make sure to provide more of this content in the next few weeks as well. Okay, traders, good luck, trade well, and talk to you soon.